Good evening, everyone. I just thought I would come on tonight to talk about refinancing because there's never been a better time for years to refinance. Right now, rates are at their lowest, and many of you have mortgages around this rate. And if you do and you are carrying debt, there's never been a better time to refinance. Even if you're carrying $20,000 in unsecured debt on a credit card at 18%, it still makes sense, even with a small penalty or with the cost to refinance, to go into a new refinance right now. Now, many of you do not know what a refinance is, so I thought I would take the time to explain. If you purchased a house, you can tap into the equity of your property up to 80% of the value. So if your value is $400,000, that means that you can get up to $300,000. Now, you would have been likely approved at maybe 5% down, and at 25 years, you can move your amortization up to 30 years if you want, or keep it at 25 years. You can pay off all of your debt, including your secured lines of credit, your car loans, your credit cards, and your payment likely will be equal to what you're currently paying on your current mortgage payment. People are in shock when they see their payment. They can't believe it. They can't understand how they can go from paying $2,000, $3,000, $4,000 a month down to $1,500 a month. It makes no sense to them, and they're actually, until we actually show them the numbers, they're in absolute shock, and they're wondering why they didn't do it a lot sooner. Because of course people are suffering. Lots of people are suffering, wondering how they're going to make the minimum payment on their credit card month to month, or they're seeing that line of credit escalate. We've seen clients that have almost $100,000 on a line of credit. They're paying that line of credit at well over 4%, and now you can get mortgages around 3% or less. So my message tonight is, if you are carrying debt, it means nothing to come to us and actually have us do an analysis, and you will see for sure that you're going to be saving a lot of money. Now, one of our strategies is, if you don't want to lose any time on your mortgage, you can take your savings or a partial amount of your savings and apply that as a lump sum or increase your mortgage payment. So in other words, you're attacking your debt at the lowest cost. Instead of making the banks rich, you're making yourselves rich. So it's very important to look at your cash flow, look at what you're paying per month, and it's usually ridiculous. As soon as people put if they go south, they put a $2,000 or $3,000 or $4,000 all-inclusive trip, all of a sudden you can't pay that back. Even with the best intentions, no one seems to be able, unless they're self-employed, pay back that enormous debt. We all have great intentions, but as soon as that goes on a credit card, you're carrying this debt. And that's exactly what the banks want us to do. They want us to be in debt, and they want us to be paying the highest cost for that money. So it's easy to do your own preliminary investigation on how much you can be approved for. You can go onto our website. We have a tool on there that you can actually put in what you think your property is worth. You do 80%, and then you can see what you can be approved for. We've also been seeing some people refinance in order to buy a rental property. You need 20% down for a rental property, and some people are taking some of the money, some of the equity out of their property so they can buy a rental. You can do that with 20% down. And others are taking a little bit of equity and buying a home for their children. They want them out of the house, and they're 34 years old, and they can be approved if they're fairly high income earners for 5% down. Yes, 5% down, you can get your kids out of the house. And many people are doing that because they want the kids to earn their own keep. They want to get them, they want to have the parents want their own lives, and they want to be able to have the children actually have a home too. And often what happens is the children aren't earning enough to be able to pass the stress test. If the kids have a car payment, they aren't qualifying with today's government stress test. So there's lots of opportunity for you to restructure your debt. It's the best thing to do if you are carrying any kind of debt. And for goodness sakes, this includes people who are living paycheck to paycheck, making $60,000 a year, to people making $180,000 a year. Big income earners are often the target of banks with lines of credit, enormous lines of credit, all paying at an enormous price in terms of interest. So my message for you tonight is definitely look at refinancing now, because it's never been a better time. So if you have any questions, please give us a call. If you have anything that you would like me to talk about in more detail, please leave a comment below. And I really appreciate everyone giving me the encouragement to continue with these videos, which I hope you find educational. So have a great evening, and we'll talk to you next Monday night. Bye for now.